Sponsored by New Orleans Distillers, creators of fine spirits and liqueurs. Through dedication to science, art, and passion, blends of tradition and flavor emerge. For you, always locally crafted. New Orleans Distillers, classically Southern.
Tonight, inflation 7%, not seen since 1982. And the Supreme Court slaps down the Biden administration's vaccine mandate for companies with 100 employees or more. We'll have that and more on Wall Street Wrap-Up. Hi, and welcome to Wall Street Wrap-Up. I'm Andre Laborde. For this Friday, January the 14th, 2022. I hope your week went well. Well, the Consumer Price Index numbers came out this week, and inflation has not subsided, and it is not temporary, but only gotten larger. Consumer prices rose year over year from December of 2020 to last month of December of 2022, up 7% for the year. And to put it in perspective, that's the largest jump in inflation since 1982, 40 years ago this year. And last week on the show, we interviewed the CEO and chairman of Gabelli Asset Management and Gameco Mutual Funds, Mario Gabelli. Well, tonight, we're going to have the second part and conclusion of our interview with investor and mutual fund pioneer Mario Gabelli. And we're going to talk to him about where he should be buying stocks in 2022. And what about gaming stocks, media stocks, and so much more. That's Mario Gabelli in just a minute. But first, how did the markets do this week? Well, all three indexes ended the week lower. In fact, the NASDAQ is down 5% for 2022 so far. And this week, the Dow Jones Industrial Average ended the week down 0.8 of a point. And the S&P ended the week down 0.3%. And the NASDAQ, they ended the week down almost 0.3% for the week as well. Morgan Stanley has named Wells Fargo Bank as a buy with a new price target on that bank at $64 a share. And Jeffrey Hart, who's a bank analyst at Piper Sandler, has named JP Morgan Bank as a buy with a new price target at $192. And JP Morgan closed today at $158. And finally, speaking of JP Morgan, they have raised Disney to a new price target at $220 a share. Well, for our interview tonight, Mario Gabelli is one of the most respected investors on Wall Street. Barron's Magazine includes him annually on their Barron's Roundtable of professional investors, and he's here with us tonight for the conclusion of our interview. So let's get to it. Hi, Mario. Welcome to Wall Street Wrap-Up.
Privileged to be here again and talk to you about the world that we live in the investment world, particularly in the equity markets.
Was it, and correct me if I'm wrong, it was either General Motors or Ford said that they wanted to be completely EV by something like 2035. Well, that's only a little bit more than 10 years away. Do you think that's just wishful thinking?
No.
Really? So you think that's a possibility?
No, it depends on the company. 13 years from now, you can take your assembly lines, you can take your methodology of coming up with equipment. You've got to build up the electronics. Think about the fabs that are being built in the United States by Samsung, by Sony, and the location. Do we worry? If you did it tomorrow and we had a problem in Taiwan, Andre, you're not going to be able to do it. But let's think about over the next 10 years, and assuming that the world doesn't have some event that I called earlier in the black swan world, I think certain companies will be able to incrementally increase capacity to that amount. Now, where they source it and which of their vehicles, and how much do they get rid of their, are they going to have a dealership system? Mm-hmm. Are they going to do direct to the consumer the way they do it? And those are questions. And so we have plenty of stocks. And, I started following the auto industry 55 years ago at Loeb Rhodes as a sell-side analyst, actually 1967. So whatever that is, in 22, that's 55 years. Mm-hmm. Basically, we have a conference every year in Las Vegas, 46 years this year, coming up in October of 2022, to look at a variety of industries. Last year, we had pre-owned cars, EVs for batteries. Who makes the batteries? Who makes the supplies? Where's lithium going to come from? How do you get cobalt? Do we have some scientists at MIT coming up with a way to do fusion? If as long as the American creative spirit is allowed to flourish and people don't say, let's, do what is good in Cuba or Caracas, we'll do okay. We'll survive, and we need global cooperation. Now, as far as Boeing and its vendor system, we're going to start seeing Boeing ramp up their 777, 747, the 737 MAX. Airbus is continuing on a NEO. And we will see a significant surge in travel and travel-related, assuming we solve these pandemic issues over the next several years. And that aging fleet, just like an aging car fleet, will be required. And so you've got companies that supply parts that will do extremely well, that somehow manage to keep their balance sheets and P&Ls in shape during this downside of the cycle.
True. Oscar, Mario, a couple of months ago, we had Oscar Munoz on, and Oscar was the former CEO and chairman of United Airlines. And Oscar was saying how they're going to be needing at United. He's still on the board. And he was saying how United's going to have to be having, I forget how many thousands of extra now pilots that they're going to be doing exactly like what you're saying, is because flight is only the passengers flight commercial is going to be only getting bigger, and they're going to be needing more pilots to man those type of planes. So Boeing, you think, would be a good buy for the long term, for a future?
Well, I tend to also like companies that are going to go through financial engineering or be part of corporate lovemaking. Which ones are going to be bought? Which ones have assets that are going to be spun off? United Technologies, for example, was a company that spun off Otis and spun off Carrier. We did the work on both of those. We found those very attractive. So we own both Otis and Carrier. Okay. And then they merged into Raytheon, and United Technologies has emerged as an interesting company. And the defense part of the business we can talk about as a subset of that. With what's going on, for example, the defense budget is $770 billion, which was likely to be approved. Was approved, in the fiscal year that we're in. And you'll see other subsets on that.
What about
essentially? Look, we have Space Force. We have the Chinese with hypersonic vehicles. We have created in the United States what we call the Maginot Line. What the French did was to build a wall and keep the Germans out the second time. The Germans just parachuted over them. So we need to come up with new technology, and then we got to establish friendships and relationships and work it out. It's an interesting challenge in the stock market.
It is. It so is. Mario, got a question. You were talking about, corporate lovemaking. Let's talk about media stocks. You're looking at I remember Sumner Redstone. I don't know if he actually invented it, but it's certainly attributed to him. He said content is king. And I'm curious of content of companies like Disney or Netflix, or are those type of media companies golden children to keep a hold of when it comes to stocks?
Well, the way you look at it is the following. That was 1975, but it wasn't MCA. Sumner didn't take on Viacom until the late 80s, and he operated movie theaters.
With national amusements, right? Mm-hmm.
But just like we came up with the idea that if you drink it, we follow it anywhere in the world, okay? Whether it's wine, water, beer, soup, blah, blah, blah. If you see anything on any device anywhere in the world, we follow it. So, we had somebody I was interviewing today who's thinking about joining us, working out of Mumbai. They have a content company there that Sony wants to buy, and a distribution business. So, yes, Disney. So then the question is, I used to go to a movie theater. We had silent movies. Then we had talkies. Then we had black and white. Then we went color. Then we had three cable network. We had CBS, ABC, and NBC, and period. Then Turner comes along. And then we had Fox. The world changes all the time. As long as the free market system allows that to occur, direct to the consumer and streaming, whether it's streaming music with Spotify and the content providers, which is, Sony Music, and Vivendi, which is Universal Music. And there's a company in Nashville, Ryman, that's coming up with some content through Ryman Auditorium and through their Opryland, and so we're constantly watching the change. And you bring up the good point. Now, let's take some of this company. It was called Viacom. Viacom is trading around $34. It has a stock that has 680 million shares. You're talking about equity of $20 billion and a debt is like 12 billion, down from 18 billion. And so $32 billion is a morsel. How did they get scale? Then AT&T came along a couple of years ago and bought Warner's. Now, we applauded the deal because we were long Warner's. Now they decided under new management, hey, you know, this isn't working for us. We'd rather stay in 5G. We'd rather offer broadband via cable. And so they're selling it off to Discovery. Discovery stock has dropped from 40 to 25. They're buying this asset. Zaslav knows what he's doing. And, you know, a year or two from now, that's the stock that's going to do quite well. So, you know, Andre, you asked the right questions. Then the question is distribution. Is it going to continue to be Netflix? Do they continue? How is it done globally? You know, we have 7.5 billion people in the world. And as a result of that, you know, how do we get content to them at a price they can afford? What do they want to see? Now, some of you like Parasite. That's a South Korean movie. Some of the viewers are going to say Squid Game, red light, green light. You know, we want a green light, red light. We want to go. And, you know, Viacom just did a deal with some of those organizations. How do we get content into China is a more interesting challenge right now. How do we put it into Iran? You know, China has 1.3 billion people.
Right.
That's important. I'll give you an example in box office. Tom Cruise has a new movie out, Top Gun 3 or whatever it's called, Top Gun 2. They've been sitting on it. That market in China for that movie would be significant. They're not allowing it in. And in addition to that, we used to do $42 billion of theatrical at box office, of which 12 billion was in China and 12 billion was in the US. And this year it's lucky to be, we hope to get back to that. And so we'll see. Stocks that I like in that area would be obviously the distribution companies. We like the notion of those companies that are in cable and in 5G.
So you think cable is still a viable type of a long-term play for equities? I'm talking, and I'm talking about what you were talking earlier about streaming. Is people aren't cutting the cord to such a degree that cable, and I'm thinking John Malone.
I agree with that. Andre, that's a good point, and I'm glad you fleshed that out so I could kind of slice and dice it. There's no question that I don't want to pay for content on a device that on a monthly basis that I don't like. Okay, do I want to buy Spotify and pay $13? Do I want to have Sirius on my radio for $12 a month? Do I want to have Netflix? Do I want to have this? So give the consumer what they want, when they want it, and have it delivered at a price that they want to pay and have it done at the right price so you can make a profit. Not very complicated, okay? Whether it was a gladiators in the 2,000 years ago, or you know, football players playing in the Superdome, and wherever. One of the areas that is very important on content, which we know about, is sports, and the notion of arm wrestling over, you know, football, American football, cricket in India. You know, tennis in a global basis. Golf came back again because of the breakdown, the home pandemics. And then, you know, how do we participate in that? And then on top of that, what do you have in terms of gambling? I watched television. I watched the game last night, a basketball game. And, you know, you see these ads for the gambling sites. And so that all of a sudden, when I was in Atlanta and I talked to the broadcaster down there, hey, that's become an important part of our revenue stream. In addition to that, what do I worry about? Well, I worry about what happened in 1919. And it wasn't the pandemic at that time that I worried about. I was worried about what happened in our White Sox in the World Series. You know, and so today...
Throwing the World Series, right.
I know. What can I tell you? Listen, this year, the World Series, the Atlanta... last year, 2021 Atlanta
Braves had the last laugh on that one, Mario, for this year with Major League Baseball. They certainly did. Well, you know, speaking of Atlanta Braves, people, I think, down deep have always maybe thought of what it would be like owning a sports team, if they could ever own a Major League Baseball team or a football team. But I know, because I've watched you so many times, there's ways that you can actually own a Major League Baseball team, isn't there?
To the degree that you want to own sports, let's assume I'm looking at somebody's graduation in the spring of 2022. Instead of buying them a nice hat buy them shares of stock in a baseball team. The Atlanta Braves are the only ones that will hopefully be fully public at that time. Right now, as we're talking, they're tracking stock, part of a John Malone and Greg Maffei's empire out of the Liberty media. But the symbol is BATRA. It's a voting stock. There's about 60 million shares. The stock's $1.8 billion. And they own the real estate. I was just, you drive around Atlanta, around Central Park there, Truist Park now. You'll see they were smart enough to build and own the real estate. And they own what I call the single A, double A, triple A franchise teams. They own those. And, we do have a lockdown. And when you're televising this, you'll probably have the lockdown still going on. It probably lasts through the spring season or strike. And but on balance, you can't produce more baseball teams. And to the degree that there's still that local passion for baseball, that's going to work. Okay. Mm-hmm. Yes, there was a retribution. They shut down the All-Star game and moved it out of Atlanta. And all of a sudden, the Atlanta Braves that were nowhere in the middle of the last summer, that is the summer of 21, they won the World Series and kept it in Atlanta.
That's right.
So stock is trading at $28. Then you want to buy a basketball team. There's a team that had for 10 years a record that would never be reproduced again, how bad they were. That's the New York Knicks. And they're owned by something called Madison Square Garden Sports. Then if you want, you can buy a soccer team by buying Manchester United. And so there are a lot of ways for an individual to buy 3 or 4 shares, give it to their best friend, give it to their children, give it to their great-grandchildren, and say you own it. And, it's kind of fun. Yeah. Plus, it gets you to focus on stocks and the capital markets.
And I'm glad you brought up, because I remember when you and I were together last time, we were talking about Madison Square Garden. And with people now getting out of the house, do you think Madison Square Garden is a good buy? Because people want to get out, people want to go to where other people are around, and you can also be a part owner of a professional team as well too, of the Knicks.
Look. There's a stadium out in LA that was named the Crypto Center or something like that. The naming rights for Madison Square Garden would provide substantial. In addition to that, in places like New York, you can sell the air rights over the stadium, the Madison Square Garden itself. But those belong to Madison Square Garden Entertainment, MSGE. And they are building a Sphere in Las Vegas for entertainment purposes. So when I look at MSGS, Madison Square Garden Sports, I see 24 million shares. I see a stock selling in, let's say, $160. It's X dollars. Then I look at what is someone willing to pay to own a team, who paid that for the team, and how important are the New York Knicks. Now, when you're talking about a stadium that seats 18,000 people, and you multiply that by the number of games they play in the playoffs, that is not as important in the valuation. It is important because you like to get that revenue stream, but you also have to look at what are they getting in terms of alternative revenues, and then what are their, what is the value for the uniqueness of having that. And then you see Stevie Cohen buy the New York Nets, and what did they pay? You get someone that bought the team in LA, the Clippers, and what did they pay? And then you look at
the
Forbes
valuations. I agree. I mean, the valuations of professional football, baseball, and basketball teams, they're not going down, especially with TV rights. They're only going up. We're going to take a break right now. If you're just joining us, we're so happy to have him back. Always a friend of the show, Mario Gabelli. Don't go away. We'll be right back after this. We're back. We're glad to have Mario Gabelli with us. Mario, our gaming stocks, and I'm thinking, because we talked before about, last time you and I were together, I think we talked about Penn National, but, companies like Penn National or DraftKings. DraftKings has been taking it on the chin lately, and I think Penn National too. Are these stocks, like these gaming stocks, now good times to buy when they have been taking it on the chin?
Well, let's go back to fundamentals.
Okay.
The attendance in Las Vegas started way back. People would go. It's changed its focus many times. And now with football coming there, with hockey there, they're going in and becoming a really good destination resort. And there's still a lot of in-person gambling. The Consumer Electronics Show will be taking place, in January. Will have its share of attendance. And there will be a lot of meetings, okay? And gambling thrives in that market. Then we step back and say, okay, what are the other big global markets? One of which is Macau, because the Chinese love to have spent some of their capital on that. And Macau has two issues that, the destination resort, but also the notion of certain things about junkets. But without getting into more details than that, what companies in the United States do I want to own that have bricks and mortars, but also doing online gambling? One of the better managed companies is a company out of Reno, Nevada called Caesars. The team there are doing extremely well. The stock in March of 2020 dropped to like $6 from 50. It's now, last time I looked, 15 times that price. And I think they have done a very good job of putting a footprint in. The number of states that are permitting gambling online is ongoing. Then we have the companies that have the FanDuel and the DraftKings brands. We have BetMGM as part of that. And that and during the process that you see, every time there's a cycle, there will be significant winners and significant losers. And then stocks get hyped up and they come down. I like the companies with good management, good brands, good access to customers. So what is the subscriber acquisition cost if you're doing direct TV? Take Live Nation. They have your name on every contest. Every time you go to a concert, you're buying a ticket through Ticketmaster. They have that data. They can use that data. But they can't give you the rewards and the accessibility that some of the landline land companies do. Do I want to buy Steve Wynn's company? Oh, not his anymore. And they have operations in Las Vegas, and they have in Boston, and so on. Mm-hmm. They also have a big Macau. Mm-hmm. So I don't know. Carlino did a good job at Penn, but I don't cover that one as carefully as I used to, and I can't comment on some of the others.
I understand. Got it. In fact, just as a point of reference, Mario, you were talking about Caesars. In the New Orleans area, we have the New Orleans Superdome. Well, we don't call it the New Orleans Superdome anymore. It's now the Caesars Superdome. So they're making
smart guys.
That's right. They sure are. Mario, I got time for one more.
By the way, the next thing they'll do is take Commander's Palace and call it Caesar's Palace.
Well, if they do, I promise you a dinner anytime you want when you come down to the Caesar's Palace over at Commander's.
I will circle that firm. Last time I was there, unfortunately, it was a while back, was when I addressed some of the trustees at Tulane.
We'll make it a definite. Got time for one more question, Mario. What's the best investment advice were you ever given?
I actually, let me tell you what I give. The best investment advice, obviously, was a professor I had at Columbia Business School by the name of Roger Murray, who succeeded Professor Graham and Dodd and taught value investing. And figure out, what is a business worth? How good are the people? What price are you paying for it? And so then you read the contemporary. Spend $1. You can't spend $1 anywhere, but go online and get the Berkshire Hathaway annual report and start reading on some of the sayings of Warren Buffett, and look at how they value businesses, and look at patience, and look at the notion of how to protect capital, how to increase capital, put money away over the next 20 or 30 years to save and have options in your retirement, and just be patient and look at compounding. If I was able to buy the island of Manhattan for $24 in 1624, even with the problems of New York today, under the previous administration, under XYZ, de Blasio, it's worth about $3 trillion. That's only a 7% compounded annual growth rate for 400 years.
That's it.
So stay around, be patient, and hopefully we allow ourselves to give some of our intelligence and our financial flexibility to the next generation and the next generation, and then have all generations, the next gen, particularly the new participants in the American system, sharing the growth, sharing the opportunities. And I think it's a great system. It worked for me, and it's going to work for a lot of people in the next 20 or 30 years.
Mario, let's not this be the last. I'd love for you to come back, my friend. Thank you so much.
Well, considering that the wine list that Commanders is interesting and you're willing to buy, you may see me sooner than you think.
Absolutely. Okay, you got a deal. Thank you so much.
All right, take care.
On. Thanks a lot, Mario. Well, what the NASDAQ 100 giveth, they can also take away. Peloton, the exercise equipment maker, after some missteps, will now be dropped on January the 24th. In their place will be Old Dominion Freight Lines. Well, out with the new and in with the old. Well, if you've got a question about finance or a comment about the show, we'd love to hear from you. Make it pithy, make it concise, and write us at Andre@WallStreetWrapUp.info. And now for a look ahead for next week. But first, what morning television show premiered 70 years ago on this day, today in 1952? Well, we'll have the answer in just a moment. Well, what morning television show premiered 70 years ago on this day in 1952? The Today Show, with their first host, Dave Garroway. I think he also had a chimp with him, too. Well, Microsoft is opening a review of sexual harassment policies due to the tenure of former CEO and board member Bill Gates. The report is expected to be completed by this spring. They said they will be releasing it. It was reported that Bill Gates had flown and was a frequent house guest of Jeffrey Epstein before he died. And the stock market will have an abbreviated week next week due to the Martin Luther King holiday on Monday. And also, coming up on Wall Street Wrap-Up in a couple of weeks, are you thinking about buying a car or maybe leasing one? If the answer is yes, you'll want to watch in 2 weeks from now when our guest is going to be the head of automotive for Consumer Reports, Mike Quincy. Now, Mike is always a lot of fun of do's and don'ts on car buying, and he's going to be with us. And by the way, what is it about those extended warranties, too? We'll ask Mike about that. And next week, we've got a great guest coming up on Wall Street Wrap-Up. James Glassman will be here. Now, Jim is a former ambassador as well as former Undersecretary of State. And a few years back, he wrote a great best-selling book called Dow 36,000. Ambassador James Glassman will be here next week on Wall Street Wrap-Up. And as a reminder, we always repeat the show on Sunday mornings, but the best way is to set your DVR so you'll never miss an episode. And that's our show for this Friday, January 14th, 2022. Hope you've enjoyed it. My thanks to Mario Gabelli for joining us this evening. But as always, we appreciate you for allowing us into your homes tonight. Remember, the stock market is going to be closed on Monday due to the Martin Luther King observance. And also remember, you can always follow us on all the social media, Facebook, YouTube, Twitter, and WYES.org. So enjoy your weekend ahead. Have a productive week as well. I'll see you next week. For Wall Street Wrap-Up, I'm Andre Laborde. Good night.
Sponsored by New Orleans Distillers, creators of fine spirits and liqueurs. Through dedication to science, art, and passion, blends of tradition and flavor emerge. For you, always locally crafted. New Orleans Distillers, classically Southern.